Hey, I'm Dave Knight with the daveknight Real Estate Team, and we love being a real estate resource for people. Today's question is, how is the market? So it's been a while since I've spoken about the current state of the market, and I'm going to focus on three things today. I'll talk about supply and demand of what we're experiencing here locally in Southern California. Second, I'll talk about rates, and then third, I'll talk about insurance. So those are all important factors in talking about what's happening out there right now. So the first is, I'd say most of the properties we see are low supply, high demand. So those are the 3-bedroom, 2-bath houses, even 2-bedroom houses, entry-level properties, up to about 1.5 million. It depends on the area, but the high demand properties, good locations, those are the properties that you probably still hear about that'll get 20, 30 offers. I think we had one recently that had over 30 offers. So that's still happening. But there's also pockets of the market. We had one in Tarzana, we had one in Studio City where the supply is very high and the demand is very low. So here's what the historical is as far as absorption rate goes, is 6 months of inventory shifts into a buyer's market. So to use simple numbers, if there's 10 properties that are closing every month and there's 10 in escrow and there's 60 properties on the market, we've got 6 months of inventory because the market's absorbing about 10 properties every month. So it would take 6 months to absorb all the properties. That shifts in, anything more than 6 months shifts into what's called a buyer's market. So we're still in a very strong seller's market in most parts of Los Angeles, but some parts of Los Angeles are seeing very low numbers of closings, escrows, and then lots of properties. So whether it's a buyer market or seller market right now still depends on the location of what the property is, where it's at, and then school district is a big determining factor of that and how hot the school district is. So there's also pockets of the market now. It seems to be in the high end and then the low end where it's low supply and low demand. So in those pockets, you can have a property hit the market and not get absorbed or not generate offers immediately. And so we're in such an instant gratification culture where we're hearing about properties selling in 3 days, 7 days, 10 days, and yet some properties are just experiencing the low demand even though there's a low supply. So it's kind of a unique market right now. Every property is different. So those are some of the situations that we're seeing. Second thing is that rates. Let's talk about rates real quick. Historically, since 1972, rates were at an average of 7.74. So we're actually not far from the average over the last 40 plus years. If you look at 1990 to 2003, the average of those rates was 5.98. So we're actually not too high compared to what we've seen over the last 20 to 40 years. So rates are perspective, and some people are holding on to the properties that they bought with a low rate because they don't want the pain of a higher rate. And our studies have found that when rates hit about 5.5%, that's where those properties get unlocked, to where people will experience the pain of a higher rate and sell that lower rate. So we'll see if that happens. The third thing that I want to talk about is insurability. So this is really important, especially condos, houses that are in fire zones or high risk for fires. Insurability is a big issue. And if we look at what's impacting insurers across the United States, there's reconstruction costs are up about 40% since 2020. So that's one factor. Another factor is that the reinsurance costs are up 37% in 2003. So reinsurance costs are basically insurance companies and their rates that insure insurance companies, if you're aware of that. The last thing is that 9 out of the last 10 years, we've had an above average portion of the United States that has experienced extreme weather conditions. That's caused lots of damage to properties, it's caused rates to come up. So insurability is another factor that's important in what we're seeing in the market right now, because you want to make certain that you can get coverage and you're aware of what that cost is going to be, which is probably higher than what it's been in the past. So hopefully that helps give you a quick summary of what we're seeing in the market. Every property is different, so we're always happy to help answer your calls about the supply and demand of your particular property. Make it a great day. We'll see you on the next video.